The Fed just cut interest rates, but Americans are paying more than ever. Your mortgage, your groceries, your gas, everything is crushing your wallet, and most people don't even realize why. Fed, short for the Federal Reserve, America's central bank, they control what's called the interest rate, the cost of borrowing money. When they cut rates, borrowing is supposed to get cheaper. Loans, mortgages, credit cards, investments, everything should benefit. Sounds good, right? But here's the secret. Most Americans don't benefit at all. In fact, they are the ones paying the hidden cost of these cuts. When the Fed cuts rates, banks can borrow money at a lower cost. They are expected to lend this money to companies and individuals at cheaper rates. In theory, businesses invest, hire more people, and the economy grows. Consumers get lower interest mortgages or car loans. But in reality, the money rarely reaches everyday Americans in a meaningful way. Most of the benefit goes to large banks and corporations first. The common household sees very little improvement. Imagine this. The Fed announces a rate cut. Banks get cheaper access to billions of dollars. They invest heavily in stock markets, real estate, and financial instruments that mostly benefit the wealthy. Meanwhile, your paycheck hasn't increased, but the cost of groceries, gas, and rent keeps rising. That's the hidden side of a rate cut.
One of the most overlooked consequences of a rate cut is inflation. When borrowing becomes cheap, both companies and consumers spend more. Increased spending drives demand up, but supply cannot always keep pace. The result? Prices rise. Your groceries, your gas, your rent, everything becomes more expensive. Even if your mortgage rate drops slightly, the real cost of living continues to climb. This is why many Americans feel like they aren't seeing any benefit from Fed rate cuts. They're paying more for essentials than they did before. This hidden inflation acts as a tax on the middle class. It silently reduces the purchasing power of your hard-earned money. And while you struggle to make ends meet, wealthy investors and large corporations reap the benefits of cheap capital and rising asset prices. Rate cuts also inflate asset bubbles. Stocks, real estate, and other investments soar because there is more cheap money chasing these assets. Those who already have wealth, large investors, corporations, and banks, benefit the most. The middle class gets left behind. Imagine a scenario where your house value increases by 20%, but your mortgage payments only drop by 1% due to a rate cut. You don't see much relief, but investors who bought multiple properties or invested in the stock market see enormous gains. This is how the system inherently favors the wealthy over ordinary Americans. A lower interest rate also weakens the U.S. dollar. When the dollar loses value, imported goods become more expensive. Electronics, clothing, and food prices increase. The impact is felt immediately by American families. Globally, emerging markets experience shocks when the Fed cuts rates. Capital flows into the U.S., currencies of other nations weaken, and commodity prices like oil and gold fluctuate. This creates a ripple effect across the world economy. While the U.S. dollar is the world's reserve currency, Americans feel the brunt of price increases at home. Cheap money intended to stimulate the economy inadvertently punishes ordinary consumers through higher costs of living. Let's take housing as an example. The Fed cuts rates. Banks advertise lower mortgage rates. On paper, this should help families afford homes, but housing prices have been steadily rising. Your monthly mortgage payment might drop slightly, but property taxes, insurance, and neighborhood costs continue to climb. Meanwhile, the cost of groceries, utilities, and healthcare keeps rising. Many Americans feel they are not actually benefiting from these rate cuts. They may be saving a few dollars on interest, but they are losing hundreds, if not thousands, in higher living expenses. This is the hidden reality most people overlook. Rate cuts look beneficial, but the everyday American is paying more than before.
So why do rate cuts hurt ordinary Americans? The system prioritizes those with access to capital. Banks and large corporations receive cheap money first. They invest, speculate, and profit from rising asset prices. Middle-class families see little benefit. The hidden costs, inflation, asset bubbles, and a weaker dollar hit everyday Americans first. Rate cuts are designed to stabilize the economy, but they do not protect the average household. Instead, they often widen the wealth gap, favoring the already wealthy. This is why economists warn that Fed rate cuts can have unintended consequences, even though they are presented as solutions to slow economic growth or recession. Behind every Fed rate cut is an unseen network of influence. Global banks, intelligence agencies, corporations, and shadow financial systems benefit before you do. The average American has no direct access to this network. You are affected by its actions, but rarely informed about its workings. Every rate cut is engineered to maintain economic stability for those who control the system. Ordinary Americans often pay the hidden price through higher prices and increased living costs without even realizing it. This is the forbidden knowledge that most media outlets and textbooks will never discuss. Understanding this system is key to protecting your finances.
So how can you protect yourself? Awareness is the first step. Understand how inflation, asset bubbles, and Fed rate cuts affect your money. Budget carefully, diversify investments, avoid assuming that lower loan rates automatically save you money. Invest in assets that can hedge against inflation. Track price trends for essentials. Stay informed about Fed policies and global financial movements. Knowledge is your most powerful tool. The more you understand the hidden mechanisms, the better prepared you will be for the consequences of rate cuts. Financial literacy and strategic planning are essential in an economy where monetary policy disproportionately benefits the wealthy. Fed rate cuts are marketed as solutions, but the truth is far more complex. The next video will dive deeper into how these rate cuts influence the economy, the stock market, housing, and your personal finances, and how you can survive and even thrive despite the system working against you. This is only the beginning of the story. The real secrets behind the Fed and its rate cuts are coming next.